Most Americans wake up every single morning and trade their time for money. They clock in, work long hours, stress over bills, and then repeat the exact same cycle the next day. But right now, across the United States, there's a growing group of ordinary people quietly building something different. They're creating income streams that continue paying them even while they sleep, travel, watch Netflix, or spend time with family. And the crazy part is that many of them are doing it with one of the oldest wealth-building strategies in America, dividend stocks. Some are generating an extra $500 a month, others are making $2,000, and a small but rapidly growing number are crossing the $5,000 per month mark in passive income. So the big question is this: how are regular Americans building these massive cash flow portfolios? And can the average person actually do the same thing starting from scratch? Because once you understand how this strategy works, you may never look at investing the same way again. For decades, most people believed the stock market was only about buying shares and hoping prices go up. But wealthy investors have always understood something deeper. The real power is not just in appreciation, it's in cash flow. Dividend stocks are shares of companies that pay investors a portion of their profits regularly, usually every quarter. That means if you own enough shares of a strong dividend-paying company, you literally get paid just for holding the stock. Think about companies like Coca-Cola, Johnson & Johnson, Procter & Gamble, or ExxonMobil. These companies generate billions in revenue every year, and many of them reward shareholders with consistent dividend payments that have lasted decades. In some cases, these businesses have increased their dividends every single year for over 25 years straight. That's why dividend investing has become one of the most popular passive income strategies in the United States. 3. Now here's where things get really interesting. Americans are no longer relying only on savings accounts or pensions to create retirement income. Inflation has changed everything. The average savings account barely keeps up with rising prices, and many people are realizing that relying entirely on Social Security may not be enough. So instead, investors are using brokerage accounts, Roth IRAs, and even 401k rollovers to build dividend portfolios designed to pay them monthly income over time. And unlike traditional jobs, these payments can continue whether you're working or not. One of the biggest misconceptions is that you need millions of dollars to start earning meaningful passive income. That's simply not true anymore. Thanks to fractional shares and commission-free investing apps, many Americans are starting with as little as $50 or $100 per week. What matters most is consistency and time. Imagine someone investing $500 every month into dividend-paying ETFs and blue-chip stocks. If those investments grow over time and the dividends are reinvested, the compounding effect becomes incredibly powerful. Eventually, the snowball starts rolling on its own. The dividends buy more shares, those shares generate more dividends, and the cycle keeps accelerating year after year. 5. This is exactly why dividend investing exploded in popularity after the pandemic. Millions of Americans started looking for ways to escape financial uncertainty. Some lost jobs, others realized how fragile their income streams really were, and many younger investors began learning about personal finance through YouTube, TikTok, and Reddit communities. Suddenly, passive income wasn't just a dream for Wall Street insiders anymore. It became part of mainstream financial culture. People started sharing screenshots of monthly dividend payments online, showing portfolios producing hundreds or even thousands of dollars without active work. And once people saw that possibility, interest skyrocketed. But here's something most beginner investors don't understand. Building $5,000 per month in passive dividend income does not happen overnight. It's usually the result of years of disciplined investing. The investors reaching those numbers often focus on a combination of high-quality dividend growth stocks, REITs, index funds, and dividend ETFs. REITs, or real estate investment trusts, became especially popular because they allow people to earn income from real estate without actually owning physical property. Many REITs distribute large portions of their profits directly to shareholders, making them attractive for income-focused investors. 7. At the same time, dividend ETFs changed the game completely. Instead of trying to pick individual winning stocks, investors can now buy funds that already contain dozens or even hundreds of dividend-paying companies. Funds like SCHD, VYM, and JEPI became incredibly popular among Americans seeking reliable cash flow. These ETFs provide diversification, lower risk, and simplified investing for beginners who may not have deep financial knowledge. And because many of these funds pay dividends monthly or quarterly, investors can see real cash entering their accounts regularly. 8. Another major reason Americans are chasing dividend income is freedom. Not luxury cars, not flashy lifestyles. Freedom. Freedom to leave toxic jobs. Freedom to reduce working hours. Freedom to spend more time with family. Freedom to survive economic downturns without panic. In fact, many dividend investors are intentionally building what they call income floors. That means creating enough passive income to cover basic living expenses like rent, groceries, utilities, insurance, and gas. Once those essentials are covered by investments instead of paychecks, life changes dramatically. Suddenly, work becomes optional rather than mandatory. There's also a psychological difference between growth investing and dividend investing that many people underestimate. When the stock market crashes, growth investors often panic because they rely mainly on rising stock prices. But dividend investors focus on cash flow. If the companies continue paying dividends during market volatility, investors feel less pressure to sell. In some cases, market crashes actually become opportunities because falling stock prices can increase dividend yields, allowing investors to buy stronger income streams at discounted prices. 10. Taxes also play a huge role in how Americans structure dividend portfolios. Qualified dividends often receive favorable tax treatment compared to ordinary income, which makes dividend investing especially attractive for higher income earners. Many investors strategically place dividend assets inside Roth IRAs so future income can potentially grow tax-free. Others use traditional IRAs or 401k accounts to defer taxes while compounding investments over decades. Understanding IRS rules, tax brackets, and account structures becomes incredibly important once portfolios start generating substantial cash flow. 11. Of course, there are risks too. Not every dividend stock is safe. Some companies offer extremely high yields that look attractive on the surface, but may actually signal financial trouble underneath. This is called a dividend trap, and many beginners fall into it chasing huge payouts. Experienced investors usually focus more on consistency, earnings growth, payout ratios, and long-term business stability rather than simply choosing the highest dividend percentage available. In the world of investing, sustainability matters far more than hype. What's fascinating is that the movement toward passive income investing is reshaping the American mindset around money itself. Younger generations are questioning the old belief that working 40 years for a paycheck is the only path to security. Instead, they're learning about assets, cash flow, and financial independence earlier than ever before. Social media helped expose millions of people to concepts that used to feel hidden behind financial advisors and Wall Street jargon. Today, someone with a smartphone can learn investing strategies that previous generations never had access to. 13. And the truth is, reaching $5,000 per month in dividend income is mathematically possible for many Americans, but it requires patience most people don't want to practice. It requires consistency when markets are boring. It requires investing during recessions when fear dominates headlines. It requires ignoring trends, avoiding emotional decisions, and thinking long-term while everyone else focuses on short-term entertainment. That's the real secret behind passive income. It's not magic. It's discipline compounded over time. 14. At the end of the day, dividend investing represents something bigger than money. It represents ownership. Every share of stock means owning a tiny piece of real businesses that continue generating profits year after year. And while most people spend their lives working for money, dividend investors slowly build systems where money starts working for them instead. That shift may sound simple, but financially, it changes everything. Because the moment your investments begin paying your bills, even partially, you start gaining control over your time, your choices, and ultimately your future. And in a country where financial stress affects millions of families every single day, that level of freedom is becoming one of the most valuable goals Americans can pursue.